Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video, I wanted to look at the idea of multiple time frames on two of what I consider to be the most important time frames, and they're very common with the weekly and daily charts. So for the first example, let's talk about AXP. When you look at AXP, and this is also a very important thing I think to consider as such a dedicated trend following trader, because when you look to the trend, we're clearly stacked above the 50, the 100, and the 200 daily moving averages. So that tells us that the overall prevailing trend is bullish. But there is, when you get too far away from these moving averages, a reversion back to them is definitely something that you could argue for. And also an important thing to focus on that is a little more technical is coming back and looking at your weekly charts and analyzing the previous major swing highs to swing lows. Now, I would not be worried, or I would not concern myself with this swing, because I concern myself with the bigger swing. So I would take the bigger swing high to swing low, and when you take that analysis and compare it to the extensions we have met, we are right at a 1618 extension. So even though the daily chart is bullish, when you've made these weekly extensions, this tends to be an area that price could pause, and even though it wouldn't necessarily, it would not be a bearish chart to pull back to 82.42, I think that's what this squeeze will bring rather than a continued advance higher. So that's an important thing to compare with those two time frames. And then you've got a similar situation on LVS. Now, when we look at LVS, we can see that we have a daily squeeze in play, but we are much more we have a tighter relationship with those 50, 100, and 2. You can see we're not nearly as far away from them, so the idea of this squeeze firing long is something I can get behind a little bit easier. However, to keep ourselves in check, or to provide another time frame of analysis, we'll come back in and take a look at the weekly and run a retracement from this swing high to this swing low. We want to include this major swing because this is the one that's the most relevant. Here again, if you're getting used to Fibonacci work or looking to incorporate it more with what you do, try to focus on the biggest swings you can find, and then you will find the most relevant levels. So if we're looking at that daily chart thinking it could fire long, it will make sense to acknowledge the resistance off of the weekly chart. So if we look at the 618 retracement there, we can see that comes in at 67.88, and then to take that a step further, we acknowledge this as being the overhead resistance and compare that with what would be an extension of the 66.22 high into its most recent major low. Look how the extension has such a tight relationship with the retracement of the other major swing. This is basically saying that I think you can play this long up into 67.85, but then from that point I would be done with it and look for the next setup. So I hope that's helpful, gives you a couple places to focus on for the weeks ahead, and we'll see you at the next free video.